And now it is no longer an individual purchasing and maintaining this vacant real estate property that will be taxed. It is now going to be a corporation. In today's video, the vacant home tax, it is now official. We're going to discuss that today. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty. As always, you can find my contact information in the description box with regards to my Gmail, my Instagram, and my office. Feel free to get in touch with me with any questions you may have with regards to Toronto real estate or general GTA real estate. If it's a question or if you need any help buying or selling, renting, or renting out your house. Anyways, having said all that, let's get to the point of today's video. And quickly, please subscribe as well if you happen to enjoy my content. But enough of that, let's get to the point of today's video, which is the vacant home tax, which now we know the government will officially implement due to this latest budgetary meeting. And within this budget meeting, they discussed a lot of other stuff that it affects real estate. It was very real estate focus heavy in some ways, but I'll discuss those in separate videos perhaps. But what most people want to know about is the vacant home tax. Now the way they technically are wording it, and it's very key into the implications of it and what it's going to actually be, is foreign owned vacant or underused property. So think about that right off the bat. We know that the vacant home tax is obviously going to apply to non-residents who own real estate property and non-residents who own real estate property that is either A, vacant, or B, underused. We all know what vacant means, and conceptually it's very easy to comprehend. Of course, yes, there's complexities in legally sometimes what really is constituted as vacant. However, putting those complexities aside, generally speaking, it's very easy to understand what vacant means with regards to real estate property. What is not as easy or as simple to comprehend is underused, or another synonym which they use for underused in this sense, according to the budgetary meeting and the actual articles that are released, is unproductive. This is going to be much more of a gray area, and as of now we don't have that much information, but what I can surmise as what they're discussing with regards to unproductive may be condominiums or property owned by foreign non-residents and not citizens who are maybe occupying it 1 month out of the year or maybe 2 months out of the year in a normal year when there is a lot of travel in between a lot of international cities. And that does truly occur. Owners of real estate property in Toronto who do not occupy it anywhere near even half a year, but occupy it on a very sporadic basis in between travel. Unproductive can also refer to vacant land. Now you might ask, well, why is vacant land not falling under the purview of vacant? Well, because when you're asserting that a certain real estate property, the actual structure is vacant, part of implying that assertion is that it can be otherwise occupied. Vacant land, not so much, right? There's no potential to occupy that vacant land. Thus, as a result, perhaps what they're also referring to with unproductive is land that the owner just simply owns and can otherwise develop to give back into providing further housing in terms of rental or purchase and sale. How much is this tax going to be, and when will it come into effect? The proposed rate is a rate of 1%, once again levied against the value of non-resident, non-citizen, foreign-owned property that's vacant or underused, beginning annually in January of 2020. So in summation, a 1% tax beginning January of this upcoming year. Whenever you're watching this, we're recording this in April of 2021. So January of 2022, that's when the 1% tax will commence. Now, will this tax actually be effective? Well, in my opinion, thus far, not so much. Think about it like this. There are many workarounds to this tax for individuals who are foreign owners of real estate property in Toronto or in the GTA who do not want to otherwise lease it out and want to maintain it as vacant or maintain it as underused, whatever the purviews of the underused definition is. There are many workarounds. I'll name two. Sometimes what they can do is transfer the ownership of the real estate property to a family member under the guise of a sale, but the sale amount is always minuscule in nature and just suffices. Obviously, there's a lot of risks involved on the behalf of the foreign individual, but this conveyance of ownership, if done so to a trusted individual, often once again family members who are residents, who are citizens, can help and often does help the owner of this individual property to avoid such taxes and other levies that are currently in place. However, that obviously requires a lot of cooperation and trust. Trust and cooperation that might be difficult to come by. Another tactic that certain individuals do employ, and this is a more common tactic rather, is a shell corporation. Simply creating a shell corporation wherein now it is no longer an individual purchasing and maintaining this vacant real estate property that will be taxed. It is now going to be a corporation. And obviously, once a corporation, an incorporated entity, owns real estate, there are a lot of series of consequences that come with that by itself in terms of capital gains and other consequences when you want to sell. And I would not be surprised if more foreign, non-resident, non-citizen owners of real estate property in Toronto who, once again, maintain it as vacant and maintain it as underused, once whatever that will come to mean, I would not be surprised if they incorporate under some certain shell corporation just merely as a mechanism to own this property. And obviously, yes, that will come with its own consequences with regards to, for instance, capital gains. However, it will be effective in helping the individual avoid this very small tax rate. And let's just get to that as a final point. I try my best on this channel to give you the is, not oughts. There's an is-ought distinction. I always say, when I say your house is on fire, that's not to be confused that your house is ought to be on fire. So there is a prescriptive where you're prescribing, you're telling what's good, what's bad, and there's a descriptive. I try to be on the descriptive side, and my descriptive analysis of this is simply that it's not going to have any consequence. Frankly, I do not see this 1% tax having any sort of negative effects that foreign owners of real estate in Toronto may be fearful of. On the flip side of things, I don't see this 1% tax having any of the good things that the proponents of it are in hopes of it achieving. But simply, I think it's honestly at a 1% tax rate, you are looking at the status quo. I don't see it being that consequential in terms of inventory, in terms of demand, in terms of sales, in terms of leverage between buyers and sellers. At a 1% rate, I simply do not see how impactful this can be. Anyways, that's Sam from SaberiSixRealEstate, Remax Realtron Realty. As always, you can find my contact information in the description box. Feel free to get in touch with me with any questions you may have. Thank you for watching, and as always, stay safe.